Arr! As everyone is trying on their Halloween costumes, me the pirate, the Bank of Canada officially increased interest rates today by 50 basis points, which is going to affect variable rates, student loans, and other such factors like this. And here's their reasoning. I'm actually looking at the Bank of Canada article, which was just posted about an hour ago. Come check it out. And they're basically talking about how supply issues and then inflated prices with commodities such as food and then energy from the war of Russia has increased inflation. We know that it's now up to 6.9%, but was as high as 8.1% 3 months ago. And they're also blaming the strong dollar, the US dollar. So what does that mean for Canada? Well, if you look down here in the article, other than interest rates going up 50%, they have a very interesting line. It says, overall, the bank projects the global growth will slow from 3% in 2022 to about 1.5% from 2023, and then pick back up by 2.5% in 2024. And then it says here, in Canada, the economy continues to operate in excess demand and labor forces remain tight. Demand for goods and services is still running ahead of economy's ability to supply them, putting upward pressure for domestic inflation. It basically means that they think that as Canadians, we're spending too much money we don't have, and that they are projecting that 2023 will be a much slower economic year than 2024, which will eventually rebound. So what that means, I think, in terms of, like, for example, our housing economy, is that probably it'll continue to be slow, according to the Bank of Canada, until things start rebounding at the end of 2023. And then finally 2024, and if you look down here a little bit further, that they're hoping that the CPI inflation is projected to move down to 3% by the end of 2023. So they're hoping that the numbers are going to rebound and it's going to be a much more normal rate. 2% is normal, and they're saying here, then return to 2% at the end of 2024. And then at the very end here, it says that given elevated inflation and inflation expectations, as well as ongoing demand pressures in the economy, the governing council expects the policy interest rates will need to rise further. So they are expecting more interest rate hikes going ahead. So a lot of changes out here. If you are on variable or your mortgage rate is going up, just hang on there. If you need some help to figure it out financially, hit me up. I have some good ideas, and I hope this helps you guys out.